Friends, I am going to show a practical system to permanently eliminate debt, poverty and unemployment in less than a year for any country. Yes, that is right, we can eliminate debt, poverty and unemployment of any country in less than a year while improving the quality of life for everyone. This presentation is split into 4 parts. Part 1, the problem. Why we are in a mess worldwide. Part 2, the solution. A practical solution that can be implemented worldwide. Part 3, the number. As applied to worst-case scenario to prove the point. Part 4, next steps. What needs to be done now? Part 1, the problem. Why we are in a mess worldwide. Let's begin by evaluating capitalism, our current economic system, by using a simplified model of our planet. In capitalism, there are 2 key players, the business owner and the worker. The business owner starts a business, takes most risk by investing capital, produces goods and services, provides employment, and makes a profit and aims to become rich. They are 10% of the population. The worker takes little risk, use their skills to normally work 8-hour shift for a business owner, takes home a wage. They are 90% of the population. We will use a planet model with 1,000 residents, with 2 countries, Country A for business owners and Country B for workers. Country A business owners have 100 residents, who have initial capital of 100 times $1 equals $100 and Country B workers have 900 residents, who have initial capital of 900 times $1 equals $900. In January, Country A, capitalist soap in a fancy restaurant called Pizza King, to produce a wonderful product called cheesy pizza, and employ 500 residents of Country A for a wage of $100. Why only pizzas? You ask? This pizza is a metaphor for all goods and services in a country, like food, medicine, housing, education, and clothing. So, in January 500 residents of Country B make 1,000 delicious pizzas, and in turn get $100 wages, paid by Country A business owners. Country A bank balance changes from original $100 minus wages paid, which is $100, therefore, $0. Country B bank balance is now original $900 plus wages earned, which is $100, therefore $1,000. The Country A now owned 1,000 pizzas. The 100 Country A business owners devoured 500 pizzas. Their bank balance does not change because whatever they pay for those pizzas will come from the same Country A account and will go back to same Country A account. Now 500 pizzas were left in Pizza King shop. But Country B residents had eaten nothing and are famished. Remember, business owners started the business to make profit. Business owners wants to make profit over their investment of $100. So business owners set the price of remaining 500 pizzas as $200. This would mean a net profit of $100 after recovering their original cost of $100. Remember, the pizzas are metaphor for all goods and services in a country, like food, medicine, housing, education and clothing. Country B workers had no choice but to buy and eat the 500 pizzas, paying the $200. After the month of January, the Country A business owners had $200 in their joint account, enjoyed 5 pizzas each. They were richer by $100. Country B residents had $800 in their account, which was $100 less than original $900, and enjoyed about half a pizza each. To recap, Country B residents made 1,000 pizzas for Pizza King, got paid $100 for it, then bought half of it, 500 pizzas, for $200, which is twice the wages they received, that is $100. Each $100 of net profit of Country A required a net loss of $100 for Country B, because the total money in the economy is constant of $1,000. This is Capitalism 101. The total amount of money in the economy remains unchanged. The business owners can only become rich by acquiring the wealth of workers. Same story repeated in February. The Country A business owners paid Country B residents wages of $100, who made 1,000 pizzas, then Country A residents ate 500, and sold the remaining 500 pizzas to Country B residents for $200, and now Country A account had $300 whereas Country B account had $700. Each month, the account of Country A business owners grows by $100, their net profit, while each month the account of Country B residents decreases by $100, the net cost they have to pay for necessities of life represented by pizza. Each month, the Country A saw its fortunes rise, and soon after 9 months, they had the entire $1,000 in their account. The Country B workers saw, mysteriously, their account deplete to $0, despite all their hard work each month. What is this mysterious play? Ladies and gents, this is play of capitalism. It is not good or bad. It is simple economics of capitalism. It transfers wealth from general population to business owners, no matter how hard the general population works. It is January of New Year. Country B workers are left with no money in their account. Business owners got 1,000 pizzas made, paid wage of $100 to workers, then business owners ate 500 of them, and put the remaining 500 pizzas on sale for workers, for $200. But the workers only had $100 to buy, their wage of month January. This was a scene of horror and terror for business owners. Time for banks to appear. They give loans, where you get some money today, called loan, and you pay back the loan in future with some interest. For example, take a loan $100 now, and pay $120 in principal and interest, in future. But banks are run by smart finance professionals. The loan they give is based on the ability to pay back. In January, the Country B workers earned $100, but need to pay $200 to business owners. So, they take a $100 of debt from the bank with a monthly interest of $10. The workers buy pizzas for $200 and are satisfied. In February, they earn $100 and pay the interest of $10 to the bank. They still owe the bank the original debt of $100. But, they need to buy $200 worth of pizza again, only left with $90. So, they take a debt of $110 in February, making their total debt to the bank of $100 plus $110, which equals $210. The monthly interest now becomes $21. The workers are getting into a bigger debt hole each month. You can see a pattern which is not sustainable. Long-term debt and spending beyond means is recipe for disaster. You may say that the Country B workers can cut their expenses and only buy $100 worth of pizza. This actually is a gigantic problem. If Country B workers only buy $100 worth of pizza, then Country A business owners will only need to produce half the original amount of pizzas, 500, only employ half the original residents from 500 to 250, increasing unemployment, and pay a salary of $50, so that they can sell it for $100, and make a profit of $50. Everyone loses in this scenario. Country B workers eat less pizza, which means lower food, medicine, housing, education and clothing, and Country A business owners have less motivation to start business and cause more unemployment. It is time for politicians to enter, who need the vote of workers and money of business owners. The politicians promise the Country B residents that all their worries should be forgotten. The government will take all the debt. Country B would get a paycheck and Country B can go buy those amazing delicious pizzas again. Banks would issue loans to government, and then the government would pay money to residents under different social schemes, and Country B residents use the debt to resume buying the 500 pizzas for $200 each month and feeding themselves. So, just to recap. Each month, Country A sold pizzas for $200 for a profit of $100, and government and Country B would take a debt of $100, to be able to afford to pay the $200 by using their wage of $100 and debt of $100. Each increase in profit of $100 for country account meant a debt of $100 in government account. The country of business owners started to amass wealth, way more than $1,000, to $2,000, to $5,000, to $300 trillion. Yes, $300 trillion is the worldwide debt, as of year 2023. There are two problems here. 1. The business owners are accumulated $300 trillion of wealth, which means $300 trillion debt by government and workers. Secondly, this is not sustainable, and unless this is changed, world economy will collapse. Many countries have already collapsed. Pakistan, Sri Lanka, Lebanon, Turkey, Egypt, Greece are examples of such collapse. They cannot pay the debt they have taken. Many are at the brink of collapse. Argentina, Venezuela, USA, Italy and Mexico are notable examples. The solution is economic democracy, a benevolent and universal model of economics, in which each resident has birthright to fair living wage. The solution is economic democracy, a humane and balanced model of economics. Let's compare economic democracy with capitalism. Economic democracy always requires full employment. Jobs are created when people are available to work. A person never has to worry about finding a job. They are also paid fair wages, which increase with productivity, whereas capitalism hires least amount of people, to minimize cost, and pays lowest salary possible. Management at capitalism companies go out of way to reduce headcounts. Often people are fired to increase share prices. Economic democracy rewards excess productivity by smaller work weeks while maintaining full employment, in contrast to capitalism where more productivity means more people losing jobs. Capitalism inevitably leads to underemployment where many people take jobs just to survive but are not fully productive based on their skill sets or cannot increase their skills. Economic democracy has minimum and maximum income limit. The minimum income is fair living wage. Then the surplus income of a company is rationally distributed based on productivity. This ensures people are motivated to have higher skills and work harder, but never have to worry about becoming homeless or suffer financial insecurity. Everyone is treated with dignity. Compare this to capitalism where lowest wage can be zero for unemployed and a person can go homeless, die in cold, die of starvation, and upper wage has no limit, with billionaires having no clue as to what to do with that extreme wealth. Capitalism looks down upon people with low income, while also making it difficult for people to have higher income. Economic democracy encourages maximum development of skills, and maximum use of technology in production. People either do research and create hardware and software that do work, or supervise machines and systems that do work. The work week reduces every year. Compared to capitalism, in which a company wants to invest least amount of money possible to train staff, and where people can be employed in very tedious and dangerous jobs. Economic democracy ensures goods and services are rationally priced for local consumption first. In contrast, capitalism allows maximum prices to maximize profit, sometimes even depriving the local population of the products they made or basic human necessities. Economic democracy empowers local population control over local resources, both buying and selling. Whereas capitalism allows a region to be dominated, exploited, and often decimated by remote population demand and supply. Economic democracy encourages balanced trade with trading partners and trades only surplus goods. Local population gets priority over local jobs and local resources. Economic democracy controls and limits savings. Yes, this is crucial as savings are directly proportional to debt. Savings are limited for special life events like a marriage, sabbatical, etc., in contrast to capitalism, which promotes unlimited accumulation, which leads to massive debt, poverty and unemployment. This requires majority of income, example 95%, to be spent in 5 weeks, a number that can be adjusted, and the rest 5% can be saved, but with a limit on the maximum savings allowed, example 3 times the yearly wage of a person, again something that is adjusted by local population. All businesses who need funds to start and operate a business get loans from cooperative banks, which in turn gets funding from government, ensuring smooth flow of capital. Part 3. The number. Economic democracy applied to USA, a country most debt in the world. This will prove that any country on this planet can end unemployment and poverty permanently in less than a year and start to eliminate their long-term debt starting from month 3. Few facts. U.S. government debt is $33 trillion. U.S. citizen debt is about $17 trillion. State debt is about $1 trillion, making total debt at $51 trillion. U.S. employed population is about 170 million, whereas U.S. unemployed are about 31 million. U.S. GDP is about $24 trillion and U.S. per capita is about $72K, which 24 trillion divided by 330 million. U.S. per capita income per employed person is about $12K per month, which is 24 trillion divided by 171 million and then further divided by 12 months. The setup. The American society is comprised of happily employed citizens and unemployed citizens. Here, our focus is on unemployed citizens. The U.S. government is very happy and eager to help the unemployed citizens permanently become employed and get out of poverty once and for all. They follow the following economic democracy setup. They pass legislation that enables creation of a new kind of bank account, called Economic Democracy Digital Bank Account. In short, EdBank account. This digital bank account has some special features. Incoming money into Ed account has to be spent within 1 month. Unspent money moves to government account. Money in the Ed account can only go to another Ed account. Money in the Ed account cannot be withdrawn as cash. Ed accounts have to pay a sales tax, which starts with 20% but will change as per needs of the society in future. Ed account can be owned by either individuals or Ed cooperative companies or the government. Here, the law will empower creation of multiple Ed cooperatives in each of the 50 states. A cooperative company is special in a way that each worker is also an owner. They are responsible for their income and expense. The Ed cooperatives in the 50 states will receive a one-time funding of $400 billion, which equates to roughly $12,000 per month for the 31 million unemployed citizens. Just as public service message, the U.S. government has been spending $1 trillion every year for a decade to reduce poverty and has been unable to reduce it by even 1%. So, a complete poverty elimination in 1 month, for just $400 billion, is mega achievement. The politicians who implement economic democracy will never ever lose an election. Plus, as you will see, the government actually reaps big rewards for this investment. In addition, while the average comes out as $12K per month, it does not mean that each newly employed Ed person will get $12K as salary. $12K is the average salary? Some will get more and some will get less, based on their productivity. The Ed cooperatives will offer job to each and every one of the 31 million unemployed Americans. The employment will come with additional benefits. Those employed in these Ed cooperatives will get full enrollment into Medicare with no copays and deductibles. Yes, that is a shocker but true. Those employed in Ed cooperatives will get full education reimbursement for job-oriented education. Another shocker, but true. The setup is now complete. Let me show the monthly transactions flows, and why this works. Each month, the cooperative's Ed account balance starts at $400 billion. They employ 31 million people. The employed are also the employers. Owner is worker and worker is owner. This is super important to keep in mind. The 31 million work and produce goods and services of the economy. Food, clothing, medicine, education, tuition, etc. We call it by the metaphor pizza. So, let's say, they produce 1 billion pizza. The cooperatives pay them away, $400 billion on last day of the month, and therefore the 31 million have an average of $12K in their Ed account. The Ed account holders now have a month to spend the entire income. The cooperatives put up a sale of 0.75 billion pizzas for 400 billion. The individuals end up buying those 0.75 billion pizzas for 400 billion. The cooperatives apply 20% tax and send 80 billion to the government. The government uses the 80 billion to buy the remaining 0.25 billion pizza, and restoring the cooperative balance back to 400 billion. Net result is, cooperative workers are fully employed. All poverty is gone. Government is able to consume 250 million pizzas or 0.25 billion pizzas each month, a return on its $400 billion grant to the cooperatives. This is required since the government is footing the initial bill for Medicaid and tuition for the 31 million. Later the 31 million will have their own medical facility and colleges for training, and even this burden will be gone. But initially, this motivation is required for people to make a big sacrifice of not accumulating wealth, but in return they get job security for life. Actual number flow each month. Jan 1. Cooperatives start with 400 billion in grant. Jan 1. All 31 million unemployed are given a job. Jan 1. All 31 million have Medicare enrollment, and for the fraction that need training, full tuition reimbursement as well as guarantee of minimum living wage. Jan 1. All 31 million get an economic democracy digital account. All their remaining bank accounts are closed. Jan 1. All 31 million agree to become owners/workers of cooperatives. Jan 1, Jan 31st. The workers work hard as they are also owners and compete with other cooperatives, to maximize their productivity and make as many pizzas as possible. Jan 31st. The workers get their initial monthly wage/income. February 1st. Government places an order for 0.25 billion pizzas with the cooperatives and pays them 80 billion payment. February 1st to 28th. The workers spend 400 billion and buy the remaining 0.75 billion pizzas. February 1st to 28th. The cooperatives receive income of $400 billion from its own residents and 80 billion from the government. But they also have to pay 20% sales tax, so send $80 billion to the government. Their end-of-month balance is back at original 400 billion. February summary. Government was able to consume 0.25 billion pizzas. Government represents the federal government, its agencies like Social Security, Medicare, state government, municipal government, and all those who normally get share of the government tax. The 31 million people were able to consume 0.75 billion pizzas, and are out of poverty. They don't have to take any debt. March. The same cycle repeats. 1 billion pizzas are made. Workers get 400 billion as wage, buy 0.75 billion pizzas for $400 billion, send $80 billion to the federal government, who turns around and buys 0.25 billion pizzas for 80 billion, restoring the economic funding of the cooperatives. Another 70 million lower wage income earners realize that economic democracy is better than plain old capitalism. They join existing 30 million in economic democracy, taking the total to 100 million. Those happy with capitalism, stay with capitalism, and are about 100 million. The new economic democracy members close their previous bank accounts and open economic democracy digital bank accounts. Government funds another 70 million times 12K equals approximately $1 trillion. This is again one-time grant. New cooperatives are created as well as current cooperatives are expanded. Economic democracy now has about 100 million workers/owners. Now, they produce on monthly basis, 4 billion pizzas. They buy 3 billion pizzas for 1.4 trillion each month. They pay 20% sales tax, which is 280 billion to federal government each month. Federal government turns around and buys the remaining 1 billion pizzas for that $280 billion, restoring the economic funding of all the cooperatives. Net, the government and its entities were able to consume 1 billion pizzas each month. The 100 million citizens are able to consume 3 billion pizzas each month. The 100 million citizens have full job security, full medical coverage, full skills due to job-oriented training, maximum productivity and are happy and healthy. But, they provide their own healthcare support as well as job training education. They don't rely on the government anymore for any of their important needs. Cooperatives support each other and also compete with each other. Failing cooperatives are acquired by successful cooperatives. The income floor and ceiling ensures that very successful cooperatives don't end up becoming monopolies. The government has net debt of $33 trillion plus $1.4 trillion rounded up to $35 trillion. The government took $35 trillion debt to help the weaker sections of the population and maintain healthy economy. But continuous debt increase is unsustainable. The $35 trillion debt that the government took has finally landed and sitting in the pockets of very rich. This was not the desired intent, but that is what has happened. So savings tax legislation is introduced. The government starts collecting 1% savings tax on the bank accounts of top $25 trillion account holders. All individuals and companies' accounts are sorted by their balance, cash, bonds, stocks, and accounts are selected from top till they sum to $25 trillion. They pay 1% tax each month. The list is recreated each month. This will generate a revenue of $250 billion each month. They can pay the monthly $80 billion interest and $170 billion of principal each month. The whole government will be debt-free in about 20 years. The rich actually retain their wealth. They don't lose anything. Question 1. Can the government issue new debt and how? All new debt issued by the government is against an economic democracy digital account. Meaning, those who are receiving the debt, corporates, and citizens, money from government will get in digital ed accounts, and those who give the government money, will receive their payment back corporates and citizens, only in ed accounts, which means they have to be spent in 1 month. The fundamental idea is that money should flow. Question 2. Will this work worldwide? All countries in the world have enough population, which if fully skilled and employed, are capable of producing goods and services required by that nation. The only reason for this not to happen is money accumulation that prevents this flow. Question 3. How will this change the trade between nations? Trade between nations is very important. But it should be balanced. If US sells $1 trillion of goods to Germany, and Germany sells 2 trillion euros worth of goods to US, then the exchange rate of USD versus Euro should be $1 equals 2 Euro, to prevent either side gaining an advantage or damaging the other side. Numbers have been simplified to show the principles. Needless to say, actual working details can be adjusted keeping practical realities and common sense. Question 4. What if I don't want to participate in economic democracy system? Those who want to say in capitalism are free to do so. There is no coercion here. Similar to trade between two nations, the ed population can trade with traditional capitalism with principle of balanced trade. Money exchange between ed accounts and regular accounts should always be balanced. If ed population sells 2 pizzas to regular capitalist accounts for $2, then ed account holders also have to buy pizza made by regular capitalist accounts, worth $2. Question 5. What's the taxation difference in economic democracy compared to capitalism? The main difference is that economic democracy accounts only pay a sales tax each month, and never have to pay income tax. They get job guarantee in return for no accumulation of wealth. The regular capitalist accounts pay income tax, can accumulate wealth and become rich, but there is no job guarantee, but will have to do balanced trade with ed accounts. Question 6. Will people movement allowed between ed accounts and regular accounts? People are free to move between ed accounts and regular accounts, capitalism. Since ed accounts cannot hold long-term wealth, There is no issue of how to move wealth from Ed account to regular account, when a person choose to move from Ed system to regular system. Those with regular accounts can move to Ed accounts, and will be given a 10-year grace period to spend all their regular income. In other words, their regular accounts cannot receive new income, and have to spend 10% of its original balance each year. They should not lose any wealth. Part 4, Next Steps. What needs to be done now? Step 1, Understand. Wealth and debt are zero-sum game. This is the most important takeaway. There are enough people on this planet to produce ample amount of goods and services for everyone. But production requires consumption, which in turn requires production. Wealth and debt prevent both. Economic democracy, based on progressive utilization theory, given by Sri Sri P.R. Sarkar, solves this problem by making each producer a consumer and each consumer a producer, through a system of cooperatives or family-owned businesses. This combined with income band that has floor and ceiling, maximization of worldwide productivity by use of technology, controlling wealth, and thereby debt, enables us to permanently eliminate poverty, debt and unemployment. Join us. Politicians listen to numbers. We need numbers. We need you. We don't need money. Facebook is our platform of choice to unite. Scan to join economic democracy on Facebook. Share, share, share. We need numbers. We don't need money. Commit to sharing and adding 100 members. Thanks for watching. For any questions, contact Shiv Proudest at shivkumarsingh@hotmail.com.